Hello and welcome to the Business Standard Morning Show. Before we start the show today, we want to share a piece of good news with you. Business Standard has bagged 2 golds at the AFAX The Future of News Award. This daily news bulletin, The Morning Show, has been awarded a gold in Best Business Program category. And the other gold went to the weekly data newsletter, Numberwise. We thank you for your continued support. Let us now get on with the show. I'm Vinu Sandhu. It's the 18th of December 2023 and here are the questions we will be answering today. Why is Infosys losing talent at the top? Will IPL auctions see a generational shift? Will the market rally continue for the 8th week? And what is the Mahadev betting app case?
Advancing data center performance and energy efficiency to solve your most important business challenges. AMD. Together, we advance.
Infosys saw yet another top-level exit last week. Its Chief Financial Officer, Nilanjan Roy, decided to step down to explore external opportunities. If we include Roy, the last 12 months have seen 8 senior-level exits at Infosys. But why so? Kasturi Akhil finds out what could be behind this unusual churn in the IT major.
Before the US Fed cheered it up, Infosys stocks had tumbled last week after its chief financial officer, Nilanjan Roy, stepped down. Shareholders were concerned as this was the 9th exit from the top brass this year. Roy was with the company for the last 4 years. Sang Rajka, the deputy CFO of Infosys since 2015, will replace Roy. The quick replacement of Roy is good news and suggests that the IT firm has good bench strength. But industry observers are still trying to comprehend why India's second largest IT services company is grappling with attrition at senior level. Human resource experts told Business Standard last week that they weren't too surprised with the churn that Infosys is seeing as the pace of growth of the Indian IT industry has slowed down. And it is prompting the top-level executives to seek more rewarding positions outside of the company.
Definitely, it cannot be the governance issue, right? Because we're talking to Infosys, and we're talking about Infosys, which is a major IT company, right? And also it's a services organization, really cannot afford to compromise on the governance aspect. What I feel is that probably there is, I would say there's a mismatch in the expectation and also in the aspiration. I think that's what is driving people to look outside. And that precisely is the reason why people generally tend to look outside or make a career move when their expectations and aspirations are not met. And I think that probably is also driving it. Maybe the circumstances, which may not be, what these executives would have thought about it, is what's kind of compelling him to look at different pastures at this point of time.
Some of the top management personnel who have left the company now hold leadership positions in rival organizations. Besides Infosys, the 4th largest IT firm Wipro too saw 10 top-level exits this year, with Chief Growth Officer Stephanie Troutman's resignation being the recent one. Of the 11-member executive committee at Wipro, 8 are new hires who joined over the past 3 years. Mohit Joshi and Richard Lobo left Infosys to join the $6.5 billion Tech Mahindra, with Joshi as its MD and CEO and Lobo as its new Chief HR Officer. Ravi Kumar S. has joined as CEO of Cognizant Technologies and K. Gopikrishnan joined Cybit Software as president, among others. Analysts from Motilal Oswal and other brokerages view this as a manageable risk, given the company's ability to cope with short-term disruptions in project management. However, other brokerage firms like Morgan Stanley said that this sudden change in top management could have a major impact on the shareholder sentiments.
Infosys is a very strong company. In that sense, it has very strong processes, and there is a lot of emphasis on talent development to the extent that people can overnight replace many of these executives. So I would think that the succession planning is in place at Infosys across senior levels. So from that perspective, I don't think any of these departures would have impacted Infosys significantly. So I would think Infosys board is conscious of even a succession planning for the CEO. So it is very, very, obviously investors are also much focused these days on succession planning across multiple levels. So Infosys obviously is focused on it too. So there is no issues on that front.
Experts agree that professionals leaving in pursuit of greener pastures is nothing new, and it happens in every organization. Having a good bench strength and succession planning save the day for any organization. Infosys has always managed to cope with such high-profile exits in the past. This time too, it should be a smooth sail.
Like Infosys, Indian Premier League or IPL too is seeing a churn. We may see a generational shift in the auction starting tomorrow in Dubai. Tariq Ahmed offers a peek into this mega event.
Players' auction for the 2024 IPL season will be held in Dubai on 19th of December. This is the first time that the IPL auction is going to take place outside India. 333 players have been shortlisted, 214 Indian and 119 foreign from a long list of 1,166 players who registered for the auction. The teams have limitations in terms of player slots and the money that they can spend. There are 77 slots and 30 of them are for foreign players. Teams of Indian Premier League have a limit of 100 crore rupees to spend to buy a 25-player squad with not more than 8 foreign players. When going for the auction, Gujarat Titans have the most money in their purse, with 38.15 crore rupees to spend, and the Lucknow Super Giants has the least with 13.15 crore rupees. The players are added into 8 base price categories from 20 lakh rupees to 2 crore rupees. There are 23 players in the 2 crore rupees base price category, and except Shardul Thakur, Umesh Yadav and Harshal Patel, rest are foreign players. Some of them, including Big Three and Steve Smith, were part of Australia's ODI World Cup winning team. Also, there are 7 English players in the highest base price category. Surprisingly, no Indian players are part of the 1.5 crore, 1 crore and 75 lakh rupees categories. But there are many young players with proven potential even in the 50 lakh rupees and below categories. The 4th highest run scorer of the last ICC Men's World Cup, New Zealand's 24 years old Rachin Ravindra, and Afghanistan's top scorer in the World Cup, 23 years old Azmatullah Omarzai are few examples. So, what's to expect from the 2024 IPL auction?
The auction seems to suggest that there is definitely, more unknown players emerging, coming into the fray. But while if you look at the overall selection, it's still a combination of some of the better known international players. But I think the trend as we go forward, and this is probably some indication, is that we will see more and more unknown players, at least unknown in the international stage, who will be coming into some of these franchises.
The current IPL auction reflects a generational change marked by Hardik Pandya's ascent to Mumbai Indians captain at the age of 30 and the 24-year-old Shubman Gill taking the helm at Gujarat Titans for this season. Most teams currently have captains older than 35 years, but there is a shift towards younger leadership and teams are eager to ensure a smooth transition. Young talents like England's Harry Brook, Rachin Ravindra, Wanindu Hazaranga, Azmatullah Omarzai, Yashasvi Jaiswal and Mujib Rahman are some of the stars of the upcoming season of IPL. Amidst this youth-centric trend, a band of experienced players are still part of the IPL auction. So the question arises, will the auction indeed reflect a generational change favouring the ascent of young?
Most of the teams are going through a transitional change right now as far as talent is concerned. Most of these captains of many teams and the larger players, they have turned more than 34, 35 years of age. So you will see a transitionary phase wherein you also see replacement in terms of captain because they would want to prepare for the future. So a lot of changes around the teams, around the captaincy, the leadership, and composition of these various teams, to actually push youth at the front end.
Pundits of cricket believe that Indian Premier League has always favoured young and relatively unknown talents in the past, and this year will not be any different. There will be young players who will surprise and bag much more than their base prices. As most of the teams have captains over 35, this edition of the IPL is also poised for a generational shift and a transition of responsibilities within the teams.
Advancing data center performance and energy efficiency. To solve your most important business challenges, AMD. Together, we advance.
IPL is also a decacorn now. Its valuation has jumped about 28% in 2023. Moving on, the Lal Street Bulls got a shot in the arm last week after the US Federal Reserve signaled a pivot and 3 rate cuts in 2024. This led to euphoric buying in the markets in the last 2 sessions, taking indices to record high levels. So will the Sensex and Nifty extend their rally into this week, making it an 8th straight weekly win? Rex Kanu spoke to experts to find out.
Last week, the US Fed ringed in early Christmas for investors by signaling a pivot and subsequent 3 rate cuts in 2024. The Lal Street Bulls rode the benchmark indices to record highs, and in the process, the Sensex and the Nifty extended the winning run to the 7th straight week. The BSE Sensex zoomed from 70,000 to past 71,000 in mere 5 trading sessions, as it scaled a high of 71,606. The Nifty 50 topped the 21,000 mark, registering a new summit at 21,492, before signing off the week with a gain of around 2.3%. The broader indices also rallied up to 2.5%. While the IT index soared 7% on the back of the Fed's action. Meanwhile, the metal index, with a gain of 4.5%, was the other major gainer, followed by realty. Going ahead, analysts expect the momentum to continue and recommend using dips, if any, as opportunities to buy.
We expect this momentum to continue going ahead. There might be a phase of consolidation, but this consolidation phase can be considered as an opportunity, and FIs will definitely, would continue to, put in money into the Indian markets. Holiday season is normally a lean period, but it should not have an impact on the momentum what we have seen in the Indian market, and the long-term, medium to long-term prospects of the Indian markets are intact. We should expect and we should expect this rally to continue till the general election, May 2024.
Given the pace at which Nifty is climbing newer heights in recent days, experts foresee a possibility of Nifty topping the 22,000 mark soon.
If we close above 21,350, then clearly we are heading towards 21,800 to 22,000. Whereas on the lower side, Nifty has a strong support at 20,850. Any day close below 20,850 will result into 20,500 to 20,300 on charts.
The only major economic event this week will be the minutes of the recent RBI policy meeting on Friday. Today, on December 18, and for the rest of the week, stock-specific action, coupled with fund flows and cues from global market sentiment, will play a key role in determining the market direction.
He's making plans for an early retirement. Business Standard.
After the financial markets, let us now move on to a scam which is turning big with each passing day. The Maharashtra government has now set up a special investigation team to probe whether the owners of Mahadev betting app are linked to the wanted criminal Dawood Ibrahim. Vasudha Mukherjee has more details on this.
One of the two masterminds behind the Mahadev online betting app scam, Ravi Uppal, was detained in Dubai recently. The Enforcement Directorate is currently in touch with Dubai authorities to have Uppal deported to India. But what is this scam? An ED investigation uncovered a vast illegal betting operation run by Mahadev Online Book. Betting included poker, card games, cricket, badminton, and tennis. It even allowed bets to be placed on cricket matches and the Indian elections. The platform also offered card games like Teen Patti, poker, Dragon Tiger, and virtual cricket games, among others. The platform has been accused of match fixing, money laundering through cryptocurrency, and rigging games to ensure profits for panel owners and heavy losses for players. Mahadev Online Book operations maintained these websites, ran closed group chats, and also tried to lure people into illegal betting. Saurabh Chandrakar and Ravi Uppal are believed to be kingpin of the operations that has amassed around Rs 6,000 crore. They were operating from Dubai. ED had filed a charge sheet against both promoters before a special court in Chhattisgarh's Raipur in October. Following this, a red notice was issued by Interpol on ED's request. The charge sheet also contained the names of 14 accused, including the ringleaders. The Chhattisgarh police began its crackdown on the scam in 2021, which led to multiple FIRs, arrests, and seizure of assets before the ED began its own investigation. Since the Chhattisgarh police began its investigation, more than 75 FIRs have been registered and more than 400 accused have been arrested from across India. As of October 2023, the police had seized 191 laptops, 858 smartphones, betting-related materials, and luxury cars worth about 2.5 crore rupees. The investigation revealed the use of over 3,033 bank accounts in this racket, with around 1,035 bank accounts frozen.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Investigating agencies claimed that the Mahadev betting app's network extends beyond India to the UAE, Sri Lanka, Nepal, and Pakistan. Well, that's all for today. For more news and analysis, please log into our website business-standard.com. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.